this going.
Yeah, maybe NatGas and Snap later.
Sorry, Natgas and
Snapchat.
Snapchat.
Yeah, I know it's. Forget it. It's what it is. Yeah.
I've never looked at it, to be honest with you. Maybe
Okay.
there's something to it. I don't know. We'll have a look.
Okay.
Snapchat.
Yeah, let's have a look at DJT as well, please.
Alrighty then. Let's go. DXY. Right. Natgas I have. For Natgas, I just want to get my bearings right here.
It still hasn't reached, I think, right?
Yeah, it still has to reach. We're still looking for it to get down to this area here.
Yeah.
Here, on a higher time frame, it would be, I think, an order block on a monthly.
Yeah, there it is.
Yeah, right. So we're actually going to look at there. This very down candle here. I'm going to mark it off now. Just want to get 50% of that candle. And then we'll mark it off here as well. What did this do? Oh, hold on. Go back. Circle. Here. Okay, I see what it did.
It attacked it, right?
Right.
Kind of.
It tapped it. So with any of the, I mean, this could be it, right? But the main thing to take away here is we've tapped the order block. We're looking for the mean threshold of this monthly candle to be tapped. So that would basically be 50% of this order block.
170, yeah.
Yeah, around here. Let's get rid of this. Let's call this the mean threshold, because when we talk about order blocks, that's the only time we'll talk about mean threshold. And we tapped it, but what's not to like here is the fact that the lowest candle is an up candle, right? So if you are bearish and you want order blocks to form, you generally want the down candles to form in liquidity to be for your order blocks to be down candles, right? You want down candles to be the lowest candle. So this candle from April, last month's candle, not so good. It's an up candle, right? So
Yeah.
at some point we are going to need to take that candle, and there's also going to be a need to print a monthly down candle here, right? Because
I see
if we take away all of this, everything that happened here, right? We take all of this away as if it didn't happen. Let's see how we can do that. There, right? And the delivery started there. Visual order bring to front. Right, so that's what we're seeing with all of this delivery, right? So it's as if none of this actually ever happened, right? We'll look at it there. Means that the delivery started at this order block here, where we've marked off the black line, and then everything above it was running on buy side. So everything from here to here is all buy side, which means they need to print down candles, and there needs to be a down candle close here, body, just to balance this entire range up here. So just like they needed to do something here, you see that?
Mm.
They needed to do something here, which they did. That's what needs to happen down here. And once the mean threshold holds, then we can look for our entries around here, right? Nothing bullish on a monthly level just yet. Let's drop down to a weekly.
I was looking at it. I saw it like running away a bit. I was like, man,
Yeah, it always
did I
runs
miss
away.
this?
Yeah, it always runs away, right? Like look here, it
Yeah.
runs away and then it just does that. Yeah.
True.
So what ideally what you would like to form is a neater setup than these sort of sloppy down candles forming here.
It
Even
doesn't
though-
look pretty.
Yeah, it doesn't look pretty at all, right? And I suppose if we change up to Henry Hub, nat gas futures, not much better, but a little neater, right? And let's put that monthly candle on really quickly. So it would be here. There. Change it up to that. And lighten it down. There. Right? So you can see on Henry's hub, it didn't tap, and this is where the futures are being traded on nat gas. So if we had to look at something, let's have a look here at liquidity, right? All down candles here. All of this is now been balanced up to here. So if they were to pump anything up in particular, they'd have to bring it to here. To balance, everything below it is running on, all of this is running on sell side. Here you had up candles and down candles, so you can call it a balanced range. Everything below here, not balanced, right? Inefficient. So if they were to pump it, you could see something like that and maybe that, but we're not hoping for that. We're hoping for, or we're not hoping, we're looking for that move there to balance out this range and then give us the CSD that we want, right?
So kind of like a new order block being formed down there, right?
Yeah, so you want an order block to form in liquidity. So you want it to print a down candle here.
And take it.
And then you want to take the down candle afterward. So you want an order block to form here. And then once you get that, you want the next candle to be an up candle. That makes sense.
Got it. Yeah. That's
Right? So that will, well, let's make it green. It's a green candle. We want the next one to be a green candle. So what that would do is it would validate that this is an order block in liquidity. Here, depending what happens in this area here on the way down, we want to look for some fair value gaps being formed by a previous candle here like that. Right? You want some sort of fair value gap forming. You want to break that fair value gap, close above it. So that would give us OB validation and market structure shift. Once you got that, then that's what you look for. Right? You look for the retrace and then the move up. So right now, nothing pretty on nat gas.
yeah,
So,
just wondering.
yeah, so we do nothing. In the middle of nowhere, we do nothing.
Good.
Right, that sorts nat gas out. Let's look at Snapchat. Haven't looked at Snapchat before. Let's go.
I just saw it and it was like down only.
Yeah.
And I'm like,
down only.
yo, this has to balance at some point, right?
Yeah. So, like with everything trading, right? The good thing is the last down candle here, and this is on a monthly, that is a down candle. Everything has to come back to an order block. So that's what you want. In an ideal world or ideal situation, you want things to come back to an order block. And if the order block were to be respected, then on a monthly level, you want to see no closes below the 50% of the mean threshold of that order block. So again, here you do nothing.
Okay.
You do nothing here because what is all of this? This is not pretty. I mean, if we go down to a weekly, there may be something brewing here, but I don't like the fact that
It's not tapped. Yeah.
it's not tapped, right? Besides that, this is not an ideal situation right here where
It's just chop.
yeah, it's giving us it almost gave us the model, right? So you had this consolidation here, and then you had the run on liquidity there. Then why didn't it go and give us the market structure shift there? It came here, it went back here, and then now it's come down back here. So I wouldn't like it. It validated this guy as an order block. That's all that it did. Some change in the state of delivery, but no market structure shift. So that's a no-go, right? No-go. And you'll see, I'm going to show you the exact same. Look at just picture this here now, right? And then let's just hop on over to BTC a little earlier, and why I told the guys that something's a bit off with BTC. So you look on M15 here. You had a CSD coming in here somewhere, because this was the candle that took the liquidity here, then got traded through. But on some exchanges, it didn't take this high here, right? It came here, it went down, and then it took it. And if we're following order flow right now, this is not, none of this is a neat setup, right? So, I mean, the fair value gap is in the actual candle that took the liquidity, so that's a no-no for us. We don't look for stuff like that. Now, if you switch over to the H1, you can see all that it did was come back into fair value gap, right? Yeah?
Yeah, right, yeah.
And then fall over. Now, the other thing we could have used here is EO, right? So if we look at this candle took the liquidity, so if this was liquidity here, this candle closed below, you agree?
Yeah.
And the very next candle starts the new delivery. So the opening of that candle would start the new delivery, but what I do is I take the highest there, and these you would have seen me put onto Twitter as blue levels, right? These blue levels are basically a draw on liquidity. So how they work is, you can see it basically gave you a model in here, right? There, and then it took it. So there's your model here, acted as a draw on liquidity, and then rolled over. So
if there were to be a close, it would have been considered, okay, might take a quick long here, right?
Yeah. So we'll come down to what's happening down here, and then when we get back to BTC, we'll look at all of the other blue levels, and then we'll talk about that.
Right, okay.
Right, so BTC, nothing right now. Yeah, so nothing neat here for us to do anything. All I see here is just sideways consolidation. At some point, you want them to run this, right? Run this, then give us CSD, form your order block here, give us CSD, we'll take a retracement to up here or higher. So nothing to do on Snapchat now. What we can do though is we can set some alarms just basically at the top of that order block. SMT, what was the other one? DJT, you said.
Yeah, bro. Dow Jones Transport Index. Just want to see what's going on there. Usually a leading indicator.
Yeah. So I remember you telling me something about this, but I can't remember what exactly. But this here. So what actually happened here was it was bearish when we took the high here. Now watch this now, right? So we took the high. The candle that took the high gets traded through here, right? Giving us CSD. Let's mark it off. A change in the state of delivery. Out of interest sake or curiosity, let's flip the candle that took the liquidity and project it downwards. Should give us about 2 standard deviations exactly. Let's have a look. Yep, 2 standard deviations of that candle to the pip. Now, interesting thing here. This candle here, let's mark it off. So this was the low. And I'd consider this one, the one that closed below, let's call him CSD here, right? Also the top of that order block. So we have market structure shift, which happened when we closed above this FEG. Now, this is what you want to be seeing for stuff like this, right? You have an FEG created. You have price closing above it, like so. As soon as price closes above it, you can go long. right? Target your nearest highs. And this one actually came back to the CSD candle there. You can see that. So for the DJT, we are actually looking for retracements to go long, right? But it has to come into this order blocks formed here. So we're looking for it to get back down here, and we're looking for this area here to hold. And when we talk about that, I think this one, maybe, I don't like that there's more wicks than bodies on this extreme candle, right? But we'll use it for now and put on the equilibrium there. This was CSD, bullish CSD. So here's where you stand, SMT. You had bearish delivery, which changed to bullish delivery, right? And then what happened here? We took liquidity above here, right? So we grabbed liquidity, and then this candle got traded through here, which gave us bearish CSD, right? So delivery is currently in a bearish state, right? So we're looking for it to come down here. Unless we've taken a low here. So unless this candle here gets taken, I'm not interested in longs or anything here. I'm watching that candle high on a weekly there. So if that gets taken first, that means change in the state of delivery again, because we had a candle that took the low here and it got traded through there. So I'm interested in a bullish dealing range being formed, right? Which means we took sell side, we took buy side, which gives us a dealing range. And I'd be interested in whatever 50% of from here to here, 50% of that, and then knock it back up. For now, it's not in a bullish delivery. It's actually looking to get back down here, do something here, and then carry on up, right? So I don't know how this indicator shows or helps you with anything. But we are looking for DJT to come a bit lower.
What time frame are you looking at? Is that
right? So this is a weekly. So this is a long play now, right?
okay?
Because this is a weekly time frame. So this could take a hella long. But are looking for it to come down before heading back up.
It's usually a leading indicator for markets in general. It's the transportation index. So if there's weakness there, it indicates that things ain't going too well.
Yep.
So if we're bearish, then we should expect this to, as you said, there's a possibility of it coming down, but other markets will follow.
Yeah, but here's where this comes through, right? I'm going to show this to you. I'm going to try and prove it to you now, right? Usually what happens with the delivery like this, once you get the liquidity taken here, right? Any liquidity being taken, the candle that takes the liquidity. So let's look at this one, right? This is, now I'm giving away my entry model basically. Once I identify, let's zoom in here a bit more. I'm giving away some secrets here. So liquidity grab, this is the candle I'm interested in. That's the low of the candle I'm interested in. Once it does this, right, I'm going to immediately focus my eye on 50% of that candle for entries, right? If I don't get it there, it's going to run away. And I'll mark the 50% off. It's going to run away and then come back. So just bear with me here, right? The candle that took the liquidity, I'm interested in bodies only. 50% of that. There you go. I'll enter there, right? Same story here. I can show you that a million times in other places. Let's take, just like we took 50% of that guy, there's the candle that took liquidity. There's the low, we marked it off as CSD. Let's take 50% of that guy. And you could see a move up to that level and then down. There, right? So I'm interested immediately after the CSD happens. Immediately after the CSD, right? There. So as soon as it's traded through with this candle, I'm already marking 50% off. On the retrace, I'm entering, and then you get that, right? And then it came back in, gave you relative equal highs, and then back down. Now, same issue here. This is sort of acting like a rejection block. You can see the wicks to the downside. You could see price come back in here and then go for this here before it goes down here, right? Now, if you are saying what you are saying with the DJT being an indicator of weakness or strength, then this is most likely where our expectation for BTC comes in, when we expect BTC to tap that 30.8 here, back to order block, right here. We're looking for that, and then we're looking for it to roll over. So we've been talking about this for weeks. You have this huge order block up here, which is unmitigated, basically untapped, and there are orders lying here. This is on a daily. And if I wanted to separate that order block into two, then I'd take only the wick portion of it. Let's pull that out in time, make that guy red. And that part of it would act as a rejection block. So anything coming back into this area here, I'd either tapping the order block or tapping the rejection block. I'm not looking for anything to go above here. Give me 50% of this rejection block. So wick to wick, and that's the level I'm looking for at max. So that's where my 30.7, 30.8 orders come from. Yeah. So right now, let's look at this. Let's get rid of this, get rid of this, get rid of that. Right now I'm playing around with a few things here. This order block here from the 24th of April, it's a down candle on a daily. 50% of that candle I'm interested in. Let's just get the magnet tool on. Right, you can see we've tapped the 50%. If we close below the 50% here of this down candle here, right, I want to see tomorrow's candle immediately push back up. If not, then it means we're looking for more downside. And the other candle I'm interested in is this order block from the 27th of March, right, here to here, this guy. And there's the 50% of this guy. We haven't touched it yet. I'm looking for that to touch. Reasons I've shared in the Discord. It's too complicated for me to explain here why I'm looking for that particular OB to be touched, right? It's too much. It's just going down a rabbit hole for me to explain that one. Right, but the idea here now, let's go back to H1. On BTC, I would say M15 is your go-to for BTC. I wouldn't want to trade, ideally we wouldn't want to be trading M5. M5 is dangerous in BTC. M15 is safe. M30, H1, all good. Now, let's look at what happened here, right? We had algorithmic delivery, and I want to point this out to you. When you see delivery like this, where you have order blocks forming, price moves away, price forms down candles here, taps the order block and then moves away, forms down candles here, taps the order block, moves away, same story here, moves away, right? This is called algorithmic price delivery, and it uses every of the down candles formed as propulsion blocks to propel it higher each time until an objective is met. And most likely what you are seeing here is the same story, where you have a rejection block that would have formed there, and if we take 50% of that rejection block there, once objective was met, tapping the rejection block, order block, it gave us CSD, right? Change in the state of delivery from bullish to bearish. Again, what are you interested in? Any candles taking liquidity. This guy, I'm interested in that guy's low. That was the change in the state of delivery. I go short immediately, or I wait for a pullback here and then go short, right? So that's one. Now, in terms of the blue levels, let's try M15 if we can. H1 seems a bit better. Basically, this is an advanced form of the 2022 ICT mentorship model where you have lows or highs being broken, leaving fair value gaps behind. Those fair value gaps are then used to enter. So if you had highs being broken, leaving fair value gaps behind, those fair value gaps are used to enter. Highs being broken, leaving fair value gaps behind, those fair value gaps are used to enter. That's basically it, right? But we're not interested in the actual candle that broke the highs. We are interested in the candle that follows it, because that candle is the one that starts the new delivery. So I'm looking for, let's go here, let's zoom in here, right? See if we can get this one. You're looking for a low being broken here, right? You agree? Low being broken. The very next candle is the draw or the start of the new delivery and a draw on liquidity. There you go. Blue level, mark it off. When price comes into there, you're looking for a reaction, in this case bearish, and a move away. You can look at this with a lot of candles like the one we did here. Low being closed below with this candle. The very next candle is this guy. There's your draw on liquidity, taps and moves. So it's just a spin-off on the FEG model or ICT's 2022 mentorship model, but with the purpose, because you can fib these specific candles for projections, and more importantly, we're using them as a draw on liquidity. Right, so we have down candles forming. We've taken liquidity here. We've got some liquidity down here. We had this massive long candle here, which we've closed below. What we need to check was, is there a need to print down candles in this range? Yes, I'd say somewhere here on the H4. Print a down candle body here, right? They've done that already. So I'm interested in the candle that made the range efficient. So if the range was running on buy side or buy only, this part of it was inefficient. They've made it efficient now with that candle. I'm interested in 27942, because if they take the candle that makes the range efficient, then that's a change in the state of delivery, and then gives us all the good stuff that we need to run higher. On H4, you'd see this rejection block here, wicks to the downside there. So that's also of interest, because we don't, if we're bullish, we want to see down candles form, but also we don't want it to take the low of the rejection block at all. So watching the rejection blocks and the mean thresholds of everything that's happening in here. On M15, sloppy delivery, very sloppy delivery, right? We've taken a low, but the lowest closing candle here is an up candle. So you can expect, if it starts to move away and this is an up candle here, they will come back and take the low of that up candle. So trapping people, and this would be the fair value gap that they do it in, right? So anticipate your next blue level is here. Candle that closed below the low. So if this was the low here, this closed below it, the very next candle here, that's what we're interested in, right? It's a draw on liquidity, and it could be a draw on liquidity to head lower to take the up candle that formed at the lows, or is forming at the lows here, right? This is on M15, on M30, it's still an up candle. H1, it's still an up candle, right? So, not happy about this part. You want the idea is you want down candles to form in liquidity, not up candles. And then you want to see the highs of those up candles being taken. So the fact that it's now up candle here, I don't trust. And we do nothing, right? We wait. Even if they do this, likelihood is that this becomes a failure swing. They go for the open liquidity run and take the low here, then give us a CSD to do that. Again, this is not the type of delivery you want to see for reversals. You don't want to see sloppy delivery like this, right? That doesn't give us any indication of CSDs, market structure shift, none of that. The ideal deliveries that you do want to see would be something like this, right? You have the highest candle, up candle being formed. We'll mark it off as an order block. There, right? That's your bearish order block. There's your FEG that formed here, right? We use that for market structure shift. When price closes below when price trades through the low of the candle, the up candle formed, it validates that up candle as an order block. So the only time something becomes an order block or a bearish order block would be when price trades through it. So it was this candle that validated this as an order block. When price closed below the fair value gap here on this candle, that gave us market structure shift. Now what happens is, and I've been saying this all the time, is you don't want OB validation before market structure shift. So when you get your OB being validated before the market structure shift happens, what do I say happens? The order block gets raided, right? That's your order block. It gets raided, and then price continues. But you can see, even if I flip this over now, right? Let's invert this. This is the kind of delivery that you want to be seeing, where you have some sort of consolidation happening, and then you have speed that forms a fair value gap, and you have an order block forming in liquidity. So if that was the low here, you have this order block that formed in liquidity, and then it got traded above, gave us the market structure shift, we long a pullback, and we do that. That's all. So when you see delivery like this, you can almost be more certain or more sure of your entries. When you start to see delivery like this, something's up here, right? This is sloppy. So at some point, even if they do this, I suspect they're going to want to come and do this, even if it's just by a wick, but it is a down candle that forms here that they take afterwards. That will give us the model that we know and love, right? Liquidity run, market structure shift, dealing range formed because we've taken sell side and then we took buy side, retracement to at least 50%, and off. So here, don't like it until we form an order block. Even though on the H4 they've balanced the range here with at this blue level. Let's make it purple so we don't get confused. They've balanced the range here by printing a down candle here. So unless they take the high of this down candle here, I'm not interested until they form an order block that is a down candle here. Right?
Poison.
Yes, sir.
Right now at 50 minutes, is this CSD?
Again,
On 15 minutes.
technically it can be CSD, right? But what don't we like? The lowest candle is an up candle.
Yes, besides of that. But technically it's now at CSD or not? That we,
Because you had
yeah,
a
okay.
down candle form
Okay.
and then the candle. I wouldn't even call it a CSD because this down candle, did it take the low? Let's have a look at this down candle's low was 27,313. The low was 27,317. So technically, this down candle did take the low by just a bit, by $4, and then it got traded through. So on technicality, you could say yes.
Okay.
One question. If you go back to H4, right?
Right.
So you have this order block marked off, or like the zone, right?
Right.
But there's a down candle closing below the mean threshold.
Where is that?
You have like the gray box, right? That's your order block?
Yeah.
Or... Okay. And you have 50% of that marked.
Right, but you see this down
Yeah.
candle of the down candle you're looking here is on an H4 level, right? But the order block itself is a daily order block,
Ah, okay. Okay,
right?
yeah.
So you can see that
It's
they would.
this guy, yeah.
Yeah.
Hmm?
So you see
Okay.
here, no candle closes below. It wick below, but no candle
Yeah.
closes below on a daily for a daily order block.
I was thinking it was the H4 order
Yeah.
block. That's my
No,
bad,
nothing
sorry.
there. And I said there are times where it can close below, and those times that it does do that, the very next candle should move away from it.
Yeah. Okay.
We had a situation where if here, right, and this pullback quite deeply, I think here. So if you were bullish here, and then this FEG that formed here, right? That FEG that formed, take 50% of it. On H4 it didn't close. I think on M15 you had closes below here.
Yeah.
But on H4, H1 there were no closes below, and then you can see what happened. Price moved away. So I mean it can I think it did on some exchanges completely fill this fair value gap here and then moved. The whole idea is with this and market structure shift, right, is if you are bullish, I didn't do NAS yet, it's still here. If you are bullish, right, any bullish fair value gaps that are being formed should contain price or support price to move higher, right?
Right.
There's fair value gap, price comes in, moves higher. Fair value gap comes in, moves higher. So that is the idea of things in a bullish delivery, right? Flip it over for a bearish delivery. You want the bearish fair value gaps to contain price to head lower. Now the market structure shift idea comes in where you get bullish fair value gaps being traded through, like here.
Disrespected, yeah.
There, right? The idea here was if this was a fair value gap that formed, price should have done this and went higher. But it closed below it. Even though there's a second one here, it closed below it as well. And then look what happened. So you don't want your fair value gaps being closed below. So that's why when we're looking for market structure shift, or when I'm marking off market structure shift, in the absence, two things, right? In the absence of the fair value gap, I'm looking for the, let's take a look here, because there's no fair value gaps here, right? There's no fair value gaps here to give me market structure shift. So we take the highest closing up candle here, is here, before this run up, right? For the liquidity run. The opening price of that candle is here. This is where I'm looking for market structure shift in the absence of a fair value gap.
Alright, okay.
When I have a
Makes
fair
sense.
value gap, I'm not interested in that. When I don't have a fair value gap, then I'm looking for what is the highest closing up candle before the run on liquidity. Did we trade through it? Close below it? Yes, we did. That's market structure shift. Now you can see, even with this case here, there's your OB, there's your validation, there's your market structure shift here happen afterwards, and there weren't any raids of this yet. So which also tells me that at some point this will get raided. It's the same idea on a daily time frame, on the higher time frame, where people were bullish. Let's go M30 and look here. Right? It could have been H4. I think at H4 maybe. Let's have a look. Because we're talking about high time frame stuff. Here. Alright? You had these series of order blocks being formed. There's your order block here. There's your fair value gap here. So you had OB validation before market structure shift. Price moved away. Price tried to come back and raid that order block here. Didn't quite succeed, but you can see the tendency to want to come back and raid when you get validation before market structure shift. Now you're sitting with this order block here at 31K, which is unmitigated, untapped, built up all of this liquidity here. Can you see that?
Mm-hmm. Yeah.
All of this liquidity is built up to be taken. Tap the order block because there's no speed in the delivery, right? We came here and now we're just meandering here, right? There's no speed until you tap the order block.
Okay.
Once you tap the order block, then you can see speed. That would make
We tapped that daily order block, and still it's very lame.
on a daily, yeah, on a daily we raided the order
On
block.
a 3-day we did too.
On a
We
3-day
are
we did.
exactly at the CA.
Yep. Let's have a look at that for you.
I'm not sure if the 3-day thing is an order block, but we tapped
It just missed it on this move up here. It just missed the CE of that. But besides that, the model to play here is what I've shown you last week, right? Let me just pull it up again for you guys.
Yeah,
I think I mentioned this last week.
Nice to be taken, right? Because the free liquidity, just take it at some point. Yeah, one.
Let's get that.
Yes, on 3-day order block we didn't add the market structure shift.
Right? Now, I don't know if you guys can see this well.
Mm-hmm.
Right? But you can see the idea is we did this move, right? And go back to it. We did the move down here. And now we are making the 3-wave sort of move to the upside, right? We haven't made the final leg up. We are stuck in this range here now. Can you see that? If we go over, that's where we're stuck. So the expectation now is we want, it's simple. If you are bearish, remember I told you this in the group as well. If you are bearish, right, you want to see a run on liquidity, buy side liquidity, and then sell side liquidity, right? So if this was liquidity here, if you are bearish, you want to see the run here, then the run down here. We take buy side, then we take sell side, which gives us the dealing range from here to here. Any retracements to 50% is a short, right? Now, if you are bearish on something, you need a run on buy side. You guys should know that already. So if there's no run on buy side, how can we be bearish? We need liquidity to fuel whatever we need to go down. Now, if they are building up all of this buy side here, there we go. Let's change that to trendline liquidity there. So if they're building up all of that, how can we be bearish without taking the high? It means liquidity is generated either externally or internally, which is what they're doing now. They're making highs and lows and highs and lows, ping-ponging around, and then they take them. But we don't want to take the high.
Why?
So we generate liquidity internally to give us the buy side liquidity that we need to take to move lower. Does that make sense? Internal liquidity engineering.
Alright, okay.
What else, guys? So again, the plan is we want BTC to head higher, and I'm almost certain that it should. We have CPI this week, so that may be interesting. We'll see what happens there. But the idea is we head higher. Now, in my own experimental time, and I told myself I wouldn't do this, there are voids created on the high time frame. You can see one here, and coincidentally we are in one right now here, right on the 11th of May. This one disappears.
But why?
It's, remember how we use our daily voids, al dente? This is a version of that extrapolated onto a quarterly candle, right? So think about this now, al dente. If from the 28th of March or the 28th to the 11th of May, none of this PA existed, right? Now we're talking about experimental stuff. None of this existed. You agree?
Okay.
On the 11th of May, we open up. We could be opening up here. We come back down. Or we open up higher. We come here. We take this high. And then we fall over. So that is why I said I'm interested in the order block created on the 27th of March. It is the last point of order flow that this remembers. See that? It's the last point of order flow that it remembered before getting into it. Now you would remember me showing you this as well, right? All the way back here. If this guy was a void here, let's go back here. I'm gonna unlighten him here, right? You see it here? If he was a void, like I am experimenting with right now, if that was a void, and those voids need to be filled, what did COVID do? It came back to the candle that it remembered, or the last point of order flow before the void happened. So treat it as a gap, came in, fill the gap, gone. It's also the reason why our expectations at some point for BTC would be to come back down to the COVID lows and fill these up. Just as there is one here at 16.7. So 11th of May will, and this is just something I'm playing around with on the side. but we are watching it. So if the delivery comes out on the 11th of May, we push up here, back to that 30.8K, where that order block is, right? It would be as if this is making a new high or liquidity run here, because all of this didn't exist. You see that? Let's close him up again. It would be as if all of this didn't exist, and we are now in a move that is taking the highs from March's highs, right? So it gives us that, there. So 11th of May is, I think, the Thursday after CPI. I'll give it a day or so. So let's just say CPI, right? CPI or the next day, something's going to happen there. But we won't concentrate too much on that. You guys know the plan here. We don't want BTC to break these lows. They should hold here, especially on the daily, and then we want it to start heading higher to take all of the liquidity generated, engineered, take it all, tap the OB, then get speed.
You think that OB is the maximum draw on liquidity?
It could be higher. We don't know.
Okay.
Yeah, could be higher. We don't know for sure. Remember, my original ideas were, if this is the start of the delivery and this is around here, which is about 38K, right? It means we are only at 75% of the way, which means this could do that. We don't know. Nobody knows. This could be even the top here. We come down here to 16 and then we go up there. That's a better delivery. It creates
really
an
nice.
accumulation phase.
I was thinking about 32.
Yeah, possible. It creates an accumulation phase up, a failure swing Y, because it doesn't take the bottom, and then a liquidity run up here to 38, even higher, and then down there. So nobody knows. That's why I say play CSD to CSD, because you don't know which one's going to do what. Now, if we are on a daily time frame, there's a daily order block here. Let's see if we can get that one right. Okay, that's a daily order block, and then I think I want 50% of that. Sorry, that's your daily order block there. 50% of that is there, and look where we came to. Exact, right? Tapped it.
Yes, but we didn't took liquidity above it.
We don't have to take liquidity above it. A bearish order block, you don't want your bearish order blocks to get taken. Those become useless to you. Yeah, those become useless to you. Your liquidity is all of this.
Oh, okay.
All these failure swings on the daily here, that's your liquidity.
Oh, okay.
Remember what else we said? We needed them here, right? Everything up to this point or below there, we needed them to come and print up candles there on a daily level, right? Zoom in there, you see that? Because everything below it is running on what? Sell side. It's down candles only, right? All this is down candles. Here, balanced. Up to this point, below, not balanced or not efficient. So when they come all the way back here, they balance the range out with which candle? This guy. Doesn't matter that we had these other candles here, right? This guy is the guy that balanced it out, and this guy's low gets taken. Change in the state of delivery. all I'm looking for is, we have bearish dealing range, I'm looking for that and that. Because they've made the range efficient up to here now. They've done the job. Right, let's get rid of this. And you'll see how today closes. It should want to close above the 50% of the mean threshold here. You can see it's already doing something
Yeah.
there.
It's at some speed now.
Isn't a failed bearish OB a breaker OB? Yep, it's a breaker. If it's failed, it becomes a breaker. That's why you don't want your bearish order blocks to become breaker blocks. You don't want them to get traded through. That is why it's so important that everything we look at, the 50% is king. The mean threshold of all your order blocks are king. So I think BTC is pretty clear. ETH is doing some interesting things. If you look at ETH, almost a similar story. Here's the candle that took liquidity. There's the low of that candle that took the liquidity, gets traded through. We've got CSD, change in the state of delivery. Price comes back and what? Taps that exact candle, moves away. But there's still a need for it to want to come back to the order block all the way up here. So we had order block, fair value gap getting traded through here, gives us market structure shift. But order block before market structure shift, and order block is likely to get raided. So that's the expectation on ETH, is also something up that way. Give me a second. There, right? Raid the order block. ETH on a daily is slightly bearish, more bearish in terms of the delivery, because we had this daily candle that took liquidity, got traded through here. We're looking for the next CSD because the highest closing candle here is a down candle, and you know, if it was a proper order block or proper rejection block, we'd want it to be an up candle, not a down candle, right? So looking for the raid on the OB at some point before it rolls over, because ETH, if you look at it, it's sort of in a giant bear flag. Not a flag kind of person, but it is what it is. What else, guys? Let's go to NAS and have a look at what's going on. So with NAS, honestly, I didn't expect it to take the high here, but it did take the highs. I was long on NAS from down here, and I'll tell you where I took it to. I took it to the rejection block here. Look what happened immediately after that. And I should have shorted, but I think I got the cold shoulder on this one. So I took it from here. We took liquidity here, CSD, price pulls back, all the good stuff right here. Because on this exchange, it didn't take the high here. On my MT4 broker, well before it got to this point, it already took the high out here. But I closed right here at 50% of this rejection block. Then you saw this massive move down immediately after that, and then all of it got traded through and back above. Now we could be in a bullish model, right, where this was the retracement and then this gives us the continuation. I don't know. There is a need for NAS to go higher. Right, we'll come back down to the short setup that I'm currently in. On a daily time frame, we had this volume imbalance here, which we filled already. Let me just make this a bit darker. Right, volume imbalance has now been filled, but there is an order block all the way up here on a daily. This guy, the low of that 13,391, right? So if it wants, it can come back here. But if we look at the delivery here, all bullish, all running on buy side. So here, inefficient. Down here, inefficient. We don't know if they want to make it efficient first and then run up, or lowest hanging fruits run up and then make it efficient down there. If you look at the structure on BTC, just like I told you just now, algorithmic delivery, can you see that? But what happens after the algorithmic delivery? Let's go back and have a look. Let's see, once objective is met, what happens? Copy that, bring him over, paste him here. Very similar kind of delivery, right? Very similar. Can you see that? So what happens after a delivery like that? Look.
Or we take some lows on NAS then, right?
There.
Yeah.
So
if it plays out.
Yeah. So so BTC, where did it come back to? Order block. And then it just died. Same delivery, right? We come back to the order block, and then that happens. Expectations. Now, 13,726 is what we had our eye on for I don't even know how long now. Sloth, months, not a year, very long time. And what's interesting about this, right, besides being an inducement level where it was the high created before the break of the low, it houses liquidity, we need to take this. We can't be uber bearish or super bearish if we don't take this. Let's go on to a monthly. There's something that I wanted to show. I don't think we can. It'll be interesting to see if we can. We'll have a look at NQ, right? Now, remember our blue levels? Once we close below a range, the very next candle becomes what? Becomes a drawn liquidity. That's what happened in this particular candle here. The 13.7 candle that we just marked off, and then price died. So there would be stops resting above here. There would be liquidity resting above here. I want to see them. Let's have a look at what 50% of this is. $13,334 on a daily. Okay, we haven't touched it yet. So I don't want to be too bearish. I am short on NAS, but I don't want to be too bearish. But the only reason I am short on NAS is two reasons. There's another blue level here. This was the candle that broke the high with speed. The very next candle here, that's the candle I'm interested in. And the second reason is the need to print down candle bodies here. Also gives us that meme inverse head and shoulders, right? So I was looking for this to be a protraction on Monday, meaning a false move up to start the week, and we head a bit lower during the week. And then NAS can get bullish if it wants and do whatever the hell it wants after that. The only reason I am short here now and why I have had this here is simple. High got taken by this candle. That candle got traded through here. See that? And 50% of the bodies of that candle is where I would enter. Equalizer there. Right there. So that's the only reason I had this at the beginning of the stream. I had this short setup here, targeting the lows or even lower. Just give me a second. I think there may be some questions here. Cake USDs. Cake USD is still a thing. Let's have a look. I've got Cake BUSD, and this thing is just falling and falling and falling. I don't know where it's going to stop, to be honest. We'll have to turn off the log for this one.
Matic?
Yeah, we'll have a look at that. You can see that Cake is back to base. Oh yeah, we'll look at gold because I've got a setup for gold as well. So Cake is back to the base or the origin of the entire move up, right? This is an anatomy of a trade swing. It's now completed delivery, right? Moved away, back to base. So here you would see a lot of accumulation happening in here. And once you get that, you're going to see moves out. So when it's season or time for Cake to move, you're going to see massive moves out here from this area. Right now I would do nothing on Cake because there isn't any bullish structure here at all. It's all just down candles. Shit ton of down candles. You can't do anything here unless we get structure forming. So we get some up candles forming. Then we take the lows here. Then give us market structure shift, retracement. That's where I'll look. That's for leaps. Matic.
It tapped the mean threshold of the weekly FEG, but I don't know where it's going.
Yeah, who knows where it's going, right? This is, let's go back to log. Looks a bit better. Now with Matic, I actually wanted it to come down to 21 cents at some point before moving up to 10. That's still not out of the equation, al dente.
Okay.
Still not out of the equation. Here we do nothing here. This is a bunch of who wants to do anything here in the middle of nowhere. You've taken liquidity, you've taken the candle, so let's get rid of all of this for now, right? Switch it up to a monthly. on a monthly level, there's even CSD here if you look at it. You see it? That monthly candle took the liquidity here, and then it got traded through. So most likely, also failure, remember what we speak about, al dente, you have this monthly candle took this monthly candle's high but failed to close above it, right? So that's liquidity grab, it's not continuation. It means it would target the opposite end or the start of the delivery, which was most likely here. So this is where you headed for.
Okay.
Right, let's take a look at gold, because this is doing some good things. Now that I've explained all that I've explained to you, let's look at the daily. We've taken the high here, right? The candle that took the high, this guy, gets traded through here. So validates it as an order block. This fair value gap gets closed below, so it's market structure shift. So I'm interested again, if I take 50% of the bodies only of the candle that took the high there, switch it down to a lower time frame. I'm interested in the mean threshold around here, as high as this rejection block or this wick here. So once price comes here, even as high as here, I'm looking for a change in the state of delivery, nothing blindly. So we come up here, we come down here, failure swing, we run for liquidity, we grab, we change the state of delivery, and we short him down. And we target either the low here. All these are all targets. On a daily level, if we have to fib that down, all the way back down here. And the need to print a down candle here and balance all of this out.
So Poison, so once it moves up to target, what time frame do you prefer looking for the CSD?
Yeah, 5 or 15
I know you
minutes.
mentioned
Yeah,
5 minutes
5
before,
or
15 minutes before.
5 or 15. It's somewhat manageable on 5 or 15. You don't want to be going on M1 for this. You're gonna get burnt. On gold,
Yeah.
gold's like a rattlesnake.
Yeah.
Even 5 minutes, I found it is too small time frame.
Yeah, so let's say we on M30. Let's go M15 here, right? And this is where you'll have to get more precision with narrative, right? So if you had narrative, it means you probably could have shorted somewhere here when it created a bear. Like this is a good example, right? This is a good example because your stops, you look for the setup that fits you the best. Buy side taken with this candle. Sell side taken with this candle. What does that give us? Dealing range. So we fib from the top to the bottom. That's 50%. If any of you are looking for what the dealing range actually looks like, it's that. Let's call him dealing range. It's from there to there, right? Anything above the 50% and ideally tapping the order block. There. Then what do you look like? What do you look for? You look for down candles, up candle lows being traded through there, and you immediately go short. You can put your stop here or save a stop up there. Right now, this is That's $3. That's tight. That's a tight one. If you look hard enough, or you know what you want to look for, you'd start to see it everywhere. Because if you are just seeing this as an up candle and this as a down candle, then you're not seeing the fact that price did this, right? You had consolidation here, which is this candle. You had this up candle here do that, and then the next candle did that. You see that? So what is that from here to here? It's a dealing range. All I'm doing is I'm looking for retracements back here, where to the highest candle body closes because of resistance ideas, because this, let's zoom in more there. This took the liquidity of that high but failed to close above it, so support ideas here or resistance ideas here. When price does that, I'm shorting here, stop above here, taking it down. And what's the difference between here? 48.40, 47.50. It's not even $1. So if you're seeing candles as just an up candle and a down candle, and you're not seeing it for what they actually are doing, then you need to relook at things, because what this was, price opened, went lower, price broke higher, then it broke lower, created a dealing range, pulled back, rolled over. That's this entire delivery here. Yeah, so basically with gold, you're gonna want to be precise, because the levels here you're talking, it can be up to $20. That's too much for small accounts. It's too much. You rather wait for it to do its thing, give you the CSD, then you play. I'm not interested in longing here. I'm just interested in how it gets there, or when it gets there. And when it gets there, I want to see certain things happen. Up candles form, up candle lows being taken, and then I can play. Yeah, that's it, boys.
Can you look at Palantir before we jump
Yeah, of
off?
course.
It jumped 30% today on earnings.
Did I not tell you? Did I not fucking tell you?
What?
Those things are cursed. Those things are so cursed. Oh my god.
Damn you, Elliott Wave. I hate you.
Spell that for me.
This
P-A-L.
this is the funny thing. When you look at the daily, PLTR, yeah, PLTR. When you look at the daily, it stopped 3 cents shy of the 50% of the last like high wick.
Yeah.
And it didn't make a higher high, so we could still be okay, but it's really fucking with us for sure.
Yeah, but if you look at this, I mean, this has got to be one of the prettiest wave counts you can see, because straight out the bat, this is a wave 1 to there's a wave 2. It was 1618, almost exactly, if I'm not mistaken. Standard.
Yeah, wave 2 was a 50% retracement. Wave 3 was just shy of the 1618 if it didn't hit it.
Yeah. So
And 4 looks like a super clean flat.
the only problem with 4 is that if it's done, why hasn't it moved? That's the problem.
Yeah.
That's the problem. But if we look at it here now, right? Let's look at this. Let's do some non-Elliott wave things. we tap the order block there, right? We took liquidity here, and then it gave us CSD here, there, right? So I'm interested in 50% of the candle that took it. Body is only there. That's where I'm interested in shorting. It already gave us that, so let's zoom in a bit more. If it already gave it to us here, then we look internally. There's more liquidity being taken by this guy. Only shit thing is this is an up candle, but it has given us a tiny dealing range by taking buy side here, then sell side. So it would give us the dealing range here, right? So you're not interested in doing anything here right now. You are going to wait for, let's go 50% of this candle body here. That's where you're going to wait. That's on a weekly, right? So daily.
Yeah, so you see the blue level, like that's where it is right now after hours, right? But this is all void time, so we don't even care about this current candle.
So if it were to come, let's look here, right? Because I hate these equity candles because they're full of shit. All running on sell side, even up here. I don't know whether these guys need to balance them out. I don't know. All we can do is order flow for me is currently bearish. Now, if this, let's look at this. Let's look at it this way, Sloth. If this was buy side and then this was sell side, giving us the dealing range here, right? And let's call that the wave 1 of 5. And all of this being a 2, right? A, B, we're not going to take this low, C. Then what we can do is we can say that this is accumulation, this is a failure swing, failure to break below here. Now we're going for an OLR here.
So as long as that where the 4 is, as long as that high doesn't break,
as long as that high doesn't break, we're okay for downside.
we're still bearish,
okay.
right?
Still
Yeah. Okay. That's how I was looking at it too.
Yep.
Makes sense.
We're still okay. Still in the short. Looks like I'm gonna be, well, shit. Looks like I'm holding this overnight because I didn't close this before market closed. Never mind. Alright, I'll upload this to YouTube and we take it from there.
Thanks, boss.
Take it easy,
Thank you.
boys. Cheers.
Thank you, sir.
Cheers.
Later, guys.
Bye. Alright, TikTok boys, I shall catch you later. Thank you for joining. And you can find me on Twitter or Telegram if you need to know anything else.